Hey everyone, welcome to the Friday, August 30th version of Northwest Quadrant Wealth Management's e-news. Pretty eventful August, really. We had that big sell-off to start the month, and of course the annual Federal Reserve meeting in Jackson Hole during the middle of the month, where Jerome Powell communicated the Federal Reserve's intent to cut interest rates at their upcoming meeting in September. Markets expecting a quarter percentage rate cut, which not quite sure what that's actually going to do to the portrait of the consumer, but remember, consumer spending and consumer confidence and asset prices ultimately are what drive that confidence, and so marginal interest rate cut isn't really going to change the portrait much. But today, of course, we also got the Personal Consumption Expenditure Index, which is the Fed's preferred inflation gauge, came just in line with expectations. And for those of you that have been following the data, inflation's been on a pretty steady trajectory downward, but is now sort of settled in right around that 3% rate, which is definitely significantly higher than the Federal Reserve's target. And it remains to be seen whether inflation will continue that downward trajectory. But the important thing really the last month is, we are now seeing a resumption of the trends that was going on in July, which small caps were outperforming, dividend payers were outperforming, those low volatility stocks were outperforming. We got that huge sell-off in the early August that a lot of people were out on vacation, and it happened so quickly and markets snapped back so quickly. Most won't actually remember it, but the last 10 days or so we've really seen a resumption of that early summer trend. Small caps have tripled the performance of the S&P 500. Earnings growth in the small cap space has been really good, and if history's any guide, small caps definitely dramatically outperform as the Fed starts to cut rates. Tyler and I are a pretty firm belief that a large number of cuts won't be forthcoming anytime soon, but that remains to be seen as well.
We also have a pretty big date looming out there in the future, and that is the November 5th election. I know a lot of you out there are going to be really happy, and a lot of you are going to be really disappointed on the results after November 5th. But the reason I'm bringing it up is every single election cycle we get plenty of people calling, saying, this person's going to get elected, and so what's going to break loose, and I got to do something with my money. And so we're here to tell you that there will certainly be volatility around the November 5th election. And like I said, some of you are going to be disappointed with the results, and some of you are going to be happy with the results. The point in me bringing it up is you cannot make a binary investment decision with regards to who wins or who loses the election. We've had lots of crazy presidents in the past. We will have lots of crazy presidents in the future, depending on your point of view. But remember, that's not going to change people going to Costco and buying Nikes and going to McDonald's and earnings growing over time. And so, yes, there will be volatility. And if you don't do something and markets go down, you're going to say, see, I should have done something. But timing markets you cannot do it. It's a loser's game. You're always going to get out of the market, and then with the intent to get back in, and you're going to get back in at a much higher price. And that loss of return will have a very material impact on your long-term total returns. So remember, the message that you need to hear as it relates to markets around an election or anything that causes volatility is time in the market rather than trying to time the market. And so absolutely we're going to have volatility. And absolutely, you shouldn't do anything about it. You should just stay the course, because a year from the election, historically, markets have been higher most of the time, and we don't see any reason for that to be different this time. So as always, if you have questions about your situation or your portfolio, you can give us a call at the office, 800-743-0988, or you can email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.